Hello, I'm Debbie Bell-Hosking for FinextraTV at NextGen Nordics 2024 in Stockholm. And I'm joined by Patrik Havander, Head of Visa B2B Connect Europe. And we're going to be talking about B2B cross-border payments. Welcome, Patrik.
Thank you, Debbie.
Great atmosphere here today at NextGen Nordics.
It is, I agree, very much.
Lots of conversations, so
Yep.
Let's get right into our conversation, which is going to start with that banks have lost around 54% due to digital attackers of their retail payments. So how confident are you of their resilience to maintain their B2B payment volume in the cross-border space?
Well, I think that is a very good question, Debbie. I think, it depends to part, but just listening into the conversations today, I think the focus on banks today is very much about ISO migration, about regulatory questions and things like that. It is not very much about great experiences and things of that sort. This is, of course, dangerous because the digital attackers are, of course, ready to take the next step in the disruption and attacking then the more profitable B2B segments. So I would say the focus is not enough.
So you're saying the focus is not enough. What are banks doing to strengthen their commercial attractiveness in the cross-border space?
Well, I would say that there are, of course, discussions, a lot of initiatives in order to strengthen real time and things of that sort. But I think there are more fundamental questions that are not being addressed at all. And the underlying infrastructure for cross-border payments, it resides within the correspondent banking. And correspondent banking have been looking the same for many years. And the whole notion of reciprocity and bilateral relationships is really not creating the best infrastructure to create the modern functionality that the corporates are looking for.
So if you don't think there's enough being done, can we settle for easy wins for now?
I think so. There are, of course, a lot to be done. And let me just say again that the whole corporate business, the payment and the liquidity management is valued as the number one product delivery in the corporate suite of products. This is something that is well known. And of course then to have a strong offering, there is a house bank effect of three for ancillary business. So this is important to keep. Now, looking at the average cost for a mid-tier bank of producing one cross-border payment, it's around $25 to $30. In order to derive at that cost, you probably have a couple of corridors where you are very efficient of a few dollars per payment, but you then have 20% of your payments where you're paying $200 to $300 per payment. And this is not obvious for many banks. And that's the place to start, where you can really make a significant improvement of your current business. And you can also scale to many more currencies at a very low marginal cost level. So that would be one example of an easy win.
So against this landscape that you've been describing, what is Visa doing?
Visa is doing a lot in this space, I would say. So Visa is not only a card company these days. Visa have invested tremendous amounts in the account-to-account space, in the FX space, where they can provide very competitive infrastructure to the banks, where the banks is meeting is fronting the clients, and where Visa is behind and supporting with infrastructure. And this we can do from the very lowest and simplest payment to the most advanced high-value RTGS payment, and where we then can provide really world-leading experiences for these banks.
Patrik, thank you. It's clearly a constantly moving space. Great to get your insight and to speak to you. Thank you very much.
Thank you so much, Debbie, for having me.